Welcome back. This is Jacob Milliken, owner of 9M Investments, and today I wanted to cover April's private investment performance. So going back to March, if you remember, the private REITs that we use were down a little bit. They had a nice little bounce back month. And the fundamentals with the private REITs that we use are still very strong. Occupancy rates are at 95 and 98% respectively. And demand for new space has not really actually gone down at all. So very strong fundamentals behind the real estate portion of the portfolio. Kind of give you an idea of what April looked like here. Blackstone's REIT was up again slightly, 0.18%, easy for me to say. Nuveen Global Cities REIT up 2.8%. Again, Blackstone down just slightly on the year, Nuveen down a little over 1%. Still very strong dividends, 4.5% for Blackstone, 5.41% for Nuveen. Again, one of the wonderful things with this dividend, if we turn it on inside of a taxable account, that dividend in Nuveen is 100% tax-free, and in Blackstone is 90% tax-free. So huge advantages when it comes to producing income. Blackstone Private Credit, again, had a very strong April, whereas real estate has struggled a little bit so far this year. The private credit area is on a tear, and really it's realizing the full power of the interest rates that have gone up over the last year. So within both of these portfolios, they're loan portfolios to mid-sized companies. And as those interest rates have gone up, these loans are based on floating rates. So the rates have gone up within these portfolios, although that doesn't happen all at once. So each loan is pretty much on a 90-day window. And every 90 days, those rates reset. And for me and our investors, that means we're able to take advantage of those increasing interest rates over time. So where that showed up first is within the dividend rate. So Blackstone's credit here is 10.1%. That's gone up from 8% last year. And now where we're seeing it is actually a true performance of the NAV. So again, Blackstone credit up 1.2% in April, 4.6% year to date. And again, that very strong dividend. Have a new piece of the portfolio that we've added this last month in April, Carlyle Tactical Credit Fund. Again, same space, same kind of setup as Blackstone Private Credit. Their particular portfolio was up 1.39 in April, and year to date is at 4.91% with an annual dividend rate of 10.9. So again, taking advantage and really kind of being fully realized with that interest rate increase. And talk about where do you invest as interest rates go up. This is the area, and actually all four of these are the area that did really well in that environment. I think private credit's going to have some tailwinds to it for the foreseeable future based on those. Kind of overall, how do you compare that to what the markets did in April? S&P 500 was up 1.5%, NASDAQ was up 0.1%, and the bond index was down actually slightly at 0.4%. So again, what we want for this piece of the portfolio is steady Eddie performance, low volatility, and that's what we're gonna get over the long term. Even though the REIT portion of it is down a little bit on the year, this is more like what we should expect kind of moving forward. Looking at that consistent performance. So again, if you have any questions on this, please reach out. I'd be more happy to talk through it. And looking forward to next month where we have some new entries from the private space that will be going and giving you updates on. So again, I hope all is well, and have a great weekend. Talk soon.